Yo guys, welcome back to my YouTube channel. So today I've just got a trade recap for you guys. Recently I had this trade on $CHF and I ended up getting 27 to 1 out of the market from this trade. So I do just want to share how I actually accomplished that, why I actually took this trade in the first place, and hopefully some of you guys will be interested in that. So I'm just going to jump straight into it. Alright, so as always with my trading, I always start with the multi-time frame analysis, trying to understand the bigger picture on the daily. So all this stuff over here, that's a bit too far away for me to really care about that much. So when I was actually looking before this trade, I was just looking over here. So what we can see here, we have this big impulsive leg upwards, and then we've got a break structure coming out of there, which makes a new high, and then the low from that high is there. So what happens following this creation of this high is we actually break structure to the low. So this low is broken here. So that initially indicates that there is actually some bearish bias in the market on the daily. It's not confirmed at that point, but we could believe that there's a good reason for price to continue further down because clearly something's caused this breaker structure, which will be the institutions coming in and selling from the highs. So it's not really surprising if we would see it happen again. So we do see that second breaker structure coming in on $CHF. So for me, the second breaker structure really confirms that there is potentially this institutional sell bias. So for me, that is enough of a reason to potentially look for sells in the market. Now, once I've identified my two breaker structures, I'll always look for the range which caused the breaker structure. So clearly this is the low and this is the high, the point that caused the breaker structure. So if we put a horizontal ray across there, we can just basically see that relative to the high of the range, this never actually got broken on the daily range. So coming into the market, the days leading up to this trade, I was watching to see how price would react to the highs, and if it would have just broken through the highs, then I would have just either been a bullish bias or I wouldn't have been looking for a trade at all. But what I was expecting is potentially some type of reaction off here to actually sell back down to potentially the lows. So that's what I had in mind when I've seen price coming up here. So as price actually tapped into the daily, we did get the 4 hour close above the daily high, but on the daily it failed to actually close above the high and it was just wicks. So for me, I basically took it that potentially price could just be going above the daily high here to just grab the liquidity, which would be above that area. So I'll just mark that on. So once price has taken the liquidity, it makes sense that there could potentially be a reversal in the price. Alright, so let's zoom in a bit now. So this trade was taken on the 13th of August. But let's just start what happened on the 10th of August. So we've come up to the high of our daily range, which we know came from a sell bias order block. And now at the high of the daily range, we've actually created this 4H range here. So we've got the low here, so a swing low, and then the swing high. So if you think of it like this, swing low, swing high. Now, let's just take this out. We can see that there's clearly a range between this point and this point here. So if we were expecting a bullish bias to continue, then we should see something like this, and it would just come to the low of the range, and then it would just continue straight up. Now what we actually see is we see violate the range and break the structure. So for me, this indicates that there is actually a potential bearish bias in the market on the 4 hour now. So here we've got the swing low, swing high, and then a breaker structure to the low. Now, this breaker structure signals to me that there's potentially sellers coming into the market, or the institutions are starting to sell from the highs basically. So considering the bigger picture here, we know that we were looking for sells out of this area up here because that's what caused this entire move on the daily range. Now, even though that's unconfirmed, once we start to see this reaction happening on the 4 hour with a break structure on the 4 hour, I think that it does actually make sense for us to potentially consider the sells now. So, but this doesn't mean just jump in straight away. So in terms of this break of structure here, that's caused by this area up here. So there's basically a range between here and here now. So in terms of that range, if we were expecting price to actually reject from a range for sells, we'd expect it to come up to the highs of the range and then sell off from there. So all I was waiting for at this point, after seeing the 4-hour breaker structure, is just for price to come back up to the highs, and then potentially we could look for sell opportunities from the highs. Alright, so I'll just replay the price action a bit here now. So we know that price has come from this high here to cause this breaker structure on the 4-hour. This is all happening in an area of the daily where it makes sense to look for sells. Now, what we also know is that there's going to be liquidity under this zone in the market, and that's just because traders who are looking for buys, who are still following this move here, are going to be placing their stops all below these areas, all below these wicks. But since we're actually looking at what's happening in terms of the ranges, we've identified that institutions have come in for sells and actually broke structure. So this area here, I'm happy to just say that it's a liquidity area and not necessarily an order block for buys, because I believe there's an order block for sells up here. Alright, so all I'm waiting for on the 4-hour is just this move back up here, and then we're looking to sell off. So I came into the market on the 13th when I woke up, and what I saw was this whole thing here. So let's just zoom into this price action on the 15-minute. Alright, so we've got our 4-hour area up here, which we know we're looking for sells from. So as price is approaching this area, what I'm really interested in is how price actually reacts when it gets to this area. And if it does react in such a way to suggest that selling would be a good idea, then there's absolutely no reason why I can't take a sell entry from that area. So what we have is price taps into the 4-hour range, this overall area that I've marked out here. And then we have a minor break structure on the 15-minute, which comes and breaks this structure here. So clearly, in terms of the 15-minute range, if it was gonna just violate this 4-hour range, then you'd expect it to pop down and then just pop straight back up. But that hasn't happened. So this 15-minute is now in favor of us looking for sells. Now, for me, I think that just the fact that we've got a breaker structure there, it's not really enough for us to just start jumping in for sells. And the way I trade, I'll always look to sell from the high or buy from the low of the range. So we've got this whole impulsive move here, and in terms of that, we've got this area up here which created it, so that could be seen as the order block, and then this move down. So I'd really be interested in potentially taking sells out of this level up here, because that is the level where institutions have sold from. But for me, since there's only been this one break of structure, that alone is not enough confluence to take a trade. But I'll definitely be interested in how price actually reacts off this area. Alright, so going into the London session, I was up quite early on this day. I was at the charts around 7:30. So what I noticed at 7:30 is we were actually approaching back into this area which I've marked out. So to me now, what we would be looking for at this point is basically some type of move up into here, and then potentially just looking at moving straight down away from it. Now, I wouldn't take a trade straight out of there because it's still, to me, not high enough probability just because we've only had that one break of structure. But I would look to potentially enter a lower time frame sell if we do see a rejection out of that zone. Now, I marked this one on at the time as well because I was anticipating that we would break structure again if we did get the reaction off this area. Alright, so let's see what happens. So on the 15-minute, we tap up into this area and we get this big wick away from it, and then quite an aggressive move actually away from this order block. Now, on the 5-minute, we can see very strong wick rejection directly from the order block. And at this point, I really just went down to the 1-minute because I wanted to really see what was actually happening in the 1-minute, which is where I can get the most details since I don't have access to the seconds time frame right now. So on the 1-minute, we can see there's this whole range up here, which is what caused the move into the order block in the first place. So right now, even though we have had this reaction off the 15-minute suspected order block, we're not really sure if it's going to continue down away from it or if it's just going to respect the 1-minute and continue up like that. So at this point, I identified that the 1-minute high was here and the 1-minute low was here. So I'm now just waiting to basically see what happens in terms of the 1-minute range and how will price react when it reaches the low of the 1-minute range. Because if it is gonna be going down from a 15-minute order block, then it's not going to respect this 1-minute low here. So let's see what happens. So we're just waiting patiently now. Alright, and right here on this candle, price actually closes below the 1-minute range. So at this point, it's really strange for this to happen if price would have been continuing upwards at this point. So for me, it's quite likely that price won't be continuing upwards and it will in fact now be continuing downwards. But it's still unconfirmed overall, so I kept watching price. Okay, now with this second break of structure here, what we've had, with this big engulfment candle, it's really clear at this point that there's an order block here. So, you know, sometimes when you've only got the one break of structure on the 1-minute, it could just be a liquidity grab. So it could even break structure and then just fly back up there like that. But in this instance, it actually reacted just below the break of structure on the 1-minute, and then it's actually broken structure again at this point. It's also left behind a candle with an absolutely clear imbalance there. So at this point now, I was really interested in potentially taking this trade. So we've got our two breaks of structure here. Now, sometimes when I'm trading, I'll take the manual execution, sometimes I'll use the limit execution. It really just depends. But for me, for this one, because it was such a low time frame trade in terms of the entry, I wasn't really that confident taking the limit execution. So the absolutely ideal entry would have just been to set the limit order there with a stop loss just above it, which in theory is completely logical and makes sense. Now, for me personally, I really wanted to actually see some type of reaction off this point before just jumping into it. Because, you know, sometimes price can just go like that, and by actually waiting for the reaction, I basically can avoid that situation from happening. But the downside of that is it resulted in me getting actually nearly twice as big of a stop loss size, so half a risk reward. So it's really whether you'd rather have that extra security or the higher risk to reward, which is honestly up to you guys. But for me, on this trade, I waited. Now, once I've seen this reaction off it, for me that was pretty convincing, and that was more than enough to suggest that we would actually potentially be going down from this order block. So at that point, I simply did the manual execution here with a 3 pip stop loss, and then I was in the trade. So just to recap the entire trade was based on the daily range to start with. It was based on a potential sell from the high of the daily range. Now on the 4 hour, we had our break of structure here, and then we had an area where we could potentially sell from. Now on the 15-minute, we revisited this 4 hour area and then broke structure on the 15-minute, indicating that price was actually going to go down from that area. And it also created this 15-minute order block inside the 4 hour order block. Now, London session on the 13th of August, we had this wick reaction on the 15-minute from the 15-minute order block. So for me now, there's a high probability that price will go down from this area, but it's still not high enough to just enter, and also we want to get a good stop loss, so that's why I jumped down to the 1 minute. On the 1 minute, price violates the structure, so it breaks structure to the low. It also then breaks structure for a second time to the low. So at this point, we've now had 2 breaks of structure in a row on the 1 minute after the rejection from the 15-minute order block for sells. So at this point, it does seem very likely that price will actually continue further down. Now, as I said, I could have just set the limit order there, and if I would have done that, I would have got pretty much twice as good of a risk to reward as I actually did. But what I did in reality was just wait to see this wick reaction, and then I manually executed as I seen this buy candle here. Now, after this, it was just a case of managing the position. So I let the position play out for a bit. Now, at this point here, I did actually move my stop loss to break even, because for me on the 1 minute, we've had this break of structure down here. Now that effectively mitigated this area up here, so there's not really too much reason for price to come back past this point now if a trade should play out. And especially after this second break of structure and the second retracement, I was happy to put my stop loss to break even. So there is my first revised stop loss, which is where I move my stop loss to break even, just to take that initial risk off the table. So in terms of targets for this trade, and if you see my previous video about the AUD USD breakdown, then you can see how I actually trade. In terms of the targets for this trade, my first target was that liquidity level on the 4 hour. Now, for me, even though that was a nice target, a 10 to 1, my next target was actually a lot further down. It was this daily low, and that potentially could have done actually roughly a 70 to 1 if it would have been reached. So for me, I was targeting this daily low. Now, that doesn't mean that I necessarily expect price to get to the daily low, but that's what I was targeting. So when it did reach the 4 hour target, I was watching it, and what I noticed is it just smashed through the target on the 4 hour without really much issue. So I just simply held the trade through that situation as it surpassed my 4 hour target. So at that point, I was then expecting potentially, but it would come down to this daily low. So that was my next target. Now, in terms of what happened next, I was simply just watching price on the 1 hour, just watching it as my management plan says to do. So here I seen basically this move up and then the swing down. So at this point, I was up, I think, over 20 to 1 at this point, and I really just I wasn't happy for the trade to come back to break even. So at this point, I made a new revised stop loss, and I just kept my stop loss just above this high here, because I still acknowledge that price could have just come up and then gone down and just then continued to the daily low. And I did think that there was some liquidity just above this area, just here. So I didn't really feel comfortable putting my revised stop loss just where the liquidity was, because I also considered that potentially the price could just pop up to the liquidity and then continue down. So for me, that's why I put the revised stop loss just a few pips above the liquidity, just to make sure that if it did just take the liquidity out, I wouldn't get stopped out with that. So in terms of that, I now had my revised stop loss too. Now, I kept watching my price, and what we had was actually this move here, and then another break of structure following it. So since this time up here where I did my second revised stop loss, we've actually had two breaks of structure. Now, for me, it really doesn't make sense for price to come up past this point if it is going to continue down to the daily low, because at the end of the day, there's an order block here which has been reacted to already. So what we would really expect is something like this if it is going to just continue down. Now, the reason why I put my stop loss above this area and not above this one is because it wouldn't be, in my mind, too surprising if price just took these highs out and then continued down. So I thought it would just be safer to keep my revised stop loss above this order block here. But I thought that keeping it above this one didn't really make sense, because if this level was broken, then I wouldn't really be super confident in price going down to the daily before it comes back up for quite a large retracement. So that was why I revised my stop loss for the third time. So let's just see what happens there. And a few hours after revising the stop loss, price actually came up and took me out. So on this trade, in the end, I was targeting potentially a 70 to 1, but I ended up getting taken out for a 27 to 1, which you can't really complain when you get 27 to 1. So yeah, I was pretty happy with this trade, and I'm happy with my management of it. Obviously, you could say, well, you could just have exited for another 40 pips there, so I could have had nearly 40 to 1 out of it. But my entire strategy was based on targeting below and managing my risk in terms of how far I would let it retrace. So I'm happy with the way that I managed this trade, and in the end, it got taken out 27 to 1. So yeah, this was one of the best trades I've ever had, and I hope you guys have just found this video interesting and hopefully understood how I took the trade and why I took it. Alright guys, so thanks for watching, and if you enjoyed this video and if you want to know more about me and about my journey with Forex, then just check out the rest of my channel. So thanks for watching guys, and please subscribe if you want to see future videos, future trade recaps, and future videos about Forex and my journey with Forex.